Hey guys, it's Steve with Futures and Charts, and I'm back with another video on what's going on in basically the diesel and gas markets. Um, just trying to keep this available for you so you can have an idea of when would be a good time to jump in and buy for next year's needs. So there are some kind of interesting things in the market going on. The API came out with their data on the inventories for crude oil, diesel, and gas. And crude oil barrels had a build of 6.5 million barrels, which was way more than they were expecting. And so that's putting some pressure on the crude oil market. But there was a drawdown of 5.6 million barrels of gasoline and 1.4 million barrels of distillates or diesel, same thing. So the it's going to be interesting. I'll show you the chart again here. We just looked at it a couple days ago, but you can see the divergence in where the crude oil market is going and where, especially distillates, because that's mostly what I watch. And so I'm going to take you over and show you the charts that I'm looking at, and just give you an idea of where I think this could go. Because like right now, there's a little, I think part of this is the fact that it's kind of a seasonal thing with heating oil season. So there's still some demand for diesel because of that. And obviously gas, that was a pretty big drawdown too. So the economy is still chugging along. But I think once, especially on the diesel end, once we get maybe kind of past the point of where everybody's filling up for their heating oil needs, maybe this stuff will drift back down. And I can show you kind of what it did last year too, which I think will probably, to a certain extent, repeat itself. So anyway, let's go look at the charts. Okay, guys, so this is the New York Harbor December diesel chart. And as you can see, it's had some pretty good momentum, and I talked about the other day that we have this gap up right here, which I think we will eventually fill. We had if you look at this candle back here where we had the big run up, this was about one of the best predictive markets we've had, was this head and shoulders pattern, which once it broke above the neckline here and it took off, but it didn't last very long. And so it's not counting the wick. The high right here is at about 248.30, and if you look over here, this little wick over here it wicked right up to that level. So it may go through that, but I kind of have a feeling that that is going to be some resistance. So, but I wanted to show you what this did last year about this time. So we're in the first part of November. So in October we had a run up, same kind of thing. I would imagine it would have been the same demand, seasonal demand for heating oil, which had it run up, and then it traded back down within this range right here. And it seems like that 220, it went a little bit below, but that 220 area has been sort of an area where we've been at for a long time, which seems to have some significance. But anyway, this is the diesel chart. I'm going to click over here to this is the crude oil chart, and you can see that crude oil is actually in a pretty good downtrend. And it's, it came down and tested this low down here. And I just don't see where, it doesn't look like crude oil is very strong. And I think where crude goes, eventually the products will go. So I just think this is going to drag once we get past this seasonality of some demand for diesel, I think it's going to drop off. So I think we're going to have a good opportunity to pick up diesel for next year. In the next, it would probably take, I would say in the next month, we get into December, I think things are going to be starting to come back down. that is if everything stays the same in the world, of course. So, but just looking at the chart and the divergence in the crude oil and the heating oil market, I would venture a guess that this popped up here and it's going to start to come down. This news about the drawdown will probably start to fade, and they'll concentrate more on the amount of crude oil that's out there. So I just think our opportunity to buy some cheaper fuel for next year is going to be coming. So be patient, and we'll keep an eye on this. And hopefully you guys are, things are going well for you. Your harvest went well, and all we got to do is wait for those wheat market, the wheat market and soybeans and that stuff seems to be going up. Thankfully, partially due to the possible China trade deal, which would be a big deal. So, because there's not that many other countries that can fill the void that China leaves when they don't buy. So, all right, that's what I got for you in this one, and hopefully this helps you. I would just say once again, let's be patient and wait for this to at least come down and fill this gap and get into this 222-ish area and possibly down 220. So that's what I got for you in this one, guys, and we'll probably see you here in another day or so, and we'll check in on this stuff again and see how things are going. So have a good one, and thanks for watching Futures and Charts.